Now the three big veterans of the market join us. Samir Arora, Ramesh and Atul are here with us in the studio as well. Let me start with you, Ramesh. What's the advice as you wind back 15 years? What would have been the best advice you gave investors and what would you give them now?
India is a land of opportunity. I mean, I think sometimes you tend to be cynical about it, but if you look back at the sweep of my own career, starting in '89 when the index was 800, today when it's closer to 30,000, it's gone up 40x in a period of say 25 years. In the 15 years that you've been present, the index has gone up 6x. So investment is a long-term process, and if you try to ride out the peaks and the valleys, you'll do all right, because the Sensex itself is compounding at about 15-16% year on year. May not be every year, but over a period of time, the average is 16%. And as I mentioned in your summit earlier, that the government of India in its magnificence is giving it to you tax-free. So, look at Indian equities. India is a great place right now to build businesses, to, create industry, and the market is rewarding that.
Absolutely. Well, before I come to Atul, let me welcome Samir Arora to this big day of ours. Samir, try and be kind to us. 15 years then and now, how does it feel?
Very happy birthday to you all. Actually, I've been with your channel, with the predecessor channel for more than 20 years. I think I started interviewing in '95 maybe, so I've seen the entire history. We were also the only firm allottees in the CNBC IPO.
Yes.
Whenever that happened, I forget which year. 2000. So I've been there longer than normal, 2000 maybe. But the last 15 years, if I were to summarize, I was talking in a different context to somebody that in the last 15 years, the Nifty index in dollar terms has outperformed Berkshire Hathaway. Ooh. So look at it that for an Indian individual who reads about Warren Buffett and what he does, and then he wants to copy him, actually just having invested in the market would have beaten Berkshire since 1998-99.
Okay, well, 15 years is multiple generations. For the new generations, for first-time investors, they still feel, get a bit skeptical after the 35% rally. We watch CNBC TV 18 every day and we say, oh, it's gone down, it's gone up so much, and you start getting worried. So, with the Nifty at 85, 50, Ramesh or Atul, whoever would like to answer, would you recommend, starting an SIP even today?
Atul, you want to start?
I think there's a strong case for it. I mean, in my journey in 15 years, I use technicals. I use a very different medium of analyzing markets. And we see that, thanks to media, that we see a lot of technicals and we say daily in, out, daily is no criticism of that. But it's been my experience, and it's come through a lot of pain and a lot of study and a lot of, a long journey, that actually you make money with the larger trends. And this comes down to the earlier point that Samir and Ramesh made, that if you really had played the larger trends, whether you use technicals or fundamentals, I think that was the way to make money. We get very, very focused on intraday movements and short-term movements. So, when you see these long journeys or these long returns, the problem is that the volatility in between, very often when markets dip, markets fail, everyone gets nervous, and people, generally sell out at the bottom. If one had looked at longer trends, one had stayed longer, I think this is definitely the most enriching way you can make money in the financial markets. You have to stomach the volatility, and the only way to stomach volatility is to look at longer trends or be invested for longer terms.
Okay. We have all kinds of people who watch us, those who are here for the long haul, those who are listening in to only the wise men who come on the channel, and those who are, of course, flitting in and flitting out intraday, intra-week, within a contract. So now let me concentrate on some of the more short-term questions as well to all three of you. Atul, the market's dipped a bit, but now back in flat terrain, and the advanced declines have been almost two stocks in the green for one in the red. What is the sense you've got of the shorter term? I mean, we did see some bit of FII selling. Quite a few promoters sold today. It's not just Infosys, which is the big news, but smaller stocks, Jubilant, Reliance Capital sold a bit in Inox as well. Thangamayil's promoters were selling. Are you getting a sense that for the moment this correction away from the 8630 mark could prolong for a bit?
Even if it does, Lata, even if it does, you may have a 2% or a 3% correction, I feel it's a buy on dip market, because I still hold the thesis that I've been, saying for the last 10 months, a year, that I see the Nifty, it's again a technical view of 10,460. I've been saying this since a year, and I still think that there's a 20-22% gain. And I think that this is going to come the next 6 to 9 months.
Is there a date for this 10,000?
Yes, as I said, mid-2015. So I would give it a 6 to 9 month kind of phase. And I think that there's a lot of money to be made, whether it's through SIP, her earlier question, or if the market corrects. I think it's an opportunity, because you look at the changing environment, you look at the mood that is changing domestically. You know, people are redeeming domestic mutual funds, but you do see SIPs come in. You do see people who are, you know, I know HNIs who have put property investments which have been very good on the block and are looking to, you know, move that into equity. And look at what's happening globally. Look at global markets. You look what is happening to the currencies. You look what is happening to commodities. So I think that there's a lot happening in the last 3 months or so, which makes the case for India much stronger. Crude, currency, you know, it's something. Inflation, I think your domestic bond yields, these are pointing to something else. And that's why I feel that this thing which looked like a crazy target 10 months ago, looks optimist today, will look pessimist, I think, 6 months from now.
But after 35%, if someone can call 22%, that is quite clearly an optimistic call. Samir, can you come in on that? I mean, there are people who can make a case on the other side that, you know, gem funds at least are pretty fully invested in Indian stocks. As well, you know, the winter session is not something that's turning out to be a great gung-ho session. If you want to pick holes in the government, you can. The divestment program has not quite got off. They have not taken advantage of the golden times. Anyway, what's your call? Do you think that for the next 6 months, there is still a lot of money to be made?
Not for just only the next 6 months, for the next number of years. I think money will be made, because right now, although it is true that the government progress in terms of announcements is happening, but not really many people are seeing things on the ground. But these things invariably happen with time if all the building blocks are in place. But I think the biggest event is the decline in oil prices, which actually is independent of the government, and in some sense is as big as the government's coming to power, or BJP coming to power, or Mr. Modi coming to power. If, let us say, that Mr. Modi had not come to power, but the Congress was in place, but oil prices had been as low as they are today, you would still have had a maybe 20% rally in the markets till now instead of the 35%. So today, to focus on only one is not enough. It is that luck has played a big part, but that luck is part and parcel of the package, because different individuals have different luck. When I used to interview analysts in the past, I used to always ask them whether they are lucky or not. That is part of the package. So the thing is that today there is a confluence of 2 or 3 things, and oil is a very massive thing. So today it is true that this parliament session is a whitewash, but if the parliament session had been very good but oil had been 100, it would not have made as big a difference. So look at it in a holistic sense, that it is India's time. And you know, many people say that this is luck, and I tweeted on this a few weeks ago, that what was oil in the Middle East, wasn't that a piece of luck that they were looking for water and they found oil? But 5, 10, 20 years, 100 years later, it is considered part and parcel of their birthright that they should have high oil prices, and they can go to 5th Avenue and say, we like this building, whereas an Indian says outside, can I buy this DVD? So point is, luck is part and parcel, and maybe it is our time right now, even if it is short term. But it is very, very big, and it is nearly as big as what the government can do or has done so far.
Ramesh, given the mood, you know, the decline in crude prices, global markets, what will be an appropriate PE multiple that India can trade at, according to you?
You know, I unfortunately never look at these kind of stuff, because, you know, the Sensex itself is comprised of, you know, multivariate companies that you do out there. Great companies will always trade at a premium to the market, and they will continue to trade at a premium to the market. So I'm not into much of this macro stuff, so I'll pass on that question.
Okay, well, this question, Atul, you cannot pass. 10,460 in the next 6 months, or mid-2015, 7 months at best.
Sure.
What will be the leaders of this rally?
I think that if you look at the market, I feel the biggest trend that's been playing out sectorally, if that's the question, has been pharma. Pharma has been, if you look at some of the charts of these larger pharma companies, it's been a 3-5-year bull market, and multi-baggers. And the beauty is that, you know, as I said, the volatility is what kills. It has been a very low volatility sector. It's not about absolute returns, it's about the trend, yes, and the less volatile trend. That's what helps an investor or a trader to stay in the trade and compound. I think in the medium term, the sector that has been interesting, and I still think, because historically I found, is automobiles. Okay. I think autos, and especially you see your ancillaries, it's much larger than just the index, has been beautiful, and there's been a lot of money made. But I think that the surprise, the trade for 2015 is what's going to happen to bond yields. bond yields which are sub 8 at the moment, I think will head to around 7.2. Again, that's a chart reading. I'm not a specialist in the debt market, but it's pure chart reading. And I think that this, people may say it's going to take a year. I think it takes 6 to 9 months. That's it. And this is going to have a very big kicker on PSU banks. PSU banks, it's lovely to be in a space where people are short or people are bearish, underweight. And with bond yields the way they are going to fall, I think, you're going to have a very big move in PSU banks. This is going to be, I think, the surprise trade of 2015. And always, the unloved or unliked space is where the surprises happen. So I think that we are in for a positive surprise. And if banks move, PSU banks move, you have your bank nifty, which has a knockdown effect on the nifty. This will be a space that will surprise.
Okay. No, actually, that's there are a wide variety of guesses.
Sure.
There are some people who have called sub 7 as well on the 10-year. And there are some who believe that it won't perhaps breach 7.5. But 7.2 looks like...
And fast.
Yeah.
And fast.
Okay. So within that 6 months that you are calling the Nifty itself.
Yeah.
Ramesh, how would you react to bond yields just as a fixed income instrument? I know you will place it way second to equities, but how would you play this trend itself? Would you play PSUs? Would you play NBFCs?
Well, it's a smart trade. I agree with him. I think... I think Ethiopia launched a bond fund at 6.5%. So, to me, it's ridiculous that India's interest rates are so high. There will be enormous pressure on the RBI to reduce it, beginning in February. So, I think it's going down. It's a smart trade. I completely agree with you. And obviously, falling interest rates are like gravity on the stock market. It'll propel the index much higher. So, you buy the interest rate sensitives, the cyclicals, to participate from that. I think that is part of the reason. Globally, they're trying to move up interest rates, inflation. India, trying to bring it down. So it has hugely positive impact for us.
Samir, you want to come in on this interest rate discussion? Atul, if you didn't hear him, was calling for 7.2 on the bond, on the 10-year. Do you play that trade? If yes, how?
Well, we don't change our preference for sectors. So, in a sense, it broadly helps us anyway because we are very big in NBFCs and even private sector banks. But specifically for this, will I buy a state-owned bank? No, I will not buy. And will I buy property? I will actually short even then, just like I even now short internet. So, some of these things are good for the country, and if it helps the country, it helps me. The good thing about being a hedge fund is that you want high returns, but you don't have to every day beat the index. Anything which helps the country helps me. I don't mind whether I myself own that stock, that sector or not. If it helps the country, it helps me because the visibility of India goes up, investors want to invest, and then, we can show our history and things like that. But every trade doesn't have to be played by everybody. So some things which we have not believed in for many years, we will not believe in it only because interest rates are lower, except that it will help everybody. And we also have, and everybody has directly or indirectly, many stocks which would benefit from all the positive trends which help a market or economy. But there's no need to specifically play for this other than if you already like some of these themes, which we do in the case of NBFCs.
Okay. Hi Samir, focusing on today's news, Infosys is down 3%. What did you make of the recent corporate development where the founding family is looking to pare down their stake?
Well, the good thing is that everybody in the world wants to be a fund manager. Every businessman's son doesn't want to do the same business, and they want to be private equity fund managers, and they want to invest in unlisted companies, and we are very fortunate that we are already doing that without having any inheritance from anybody. But in general, I would think that philosophically, not about the selling, but the process, it's a big negative that this deal is announced at 4 in the morning Singapore time or India time and is closed at 8 a.m. India time, which means not a single market in the world is open, not a single fund manager is in place, and the deal is closed, which means the deal has been pre-sold. Now, if you look at it, that in the last 5-7 days since the bonus of Infosys have been very, very weak. So I think it's a fit case for investigation because the actual deal was open at the time when each and every stock market in the world was closed. Not US, not Europe, because it was announced officially at 4 or 5 in the morning today and closed at 8 a.m. India time today when not a single market was really open, except maybe for an hour Hong Kong was open. So it's a big philosophical negative, but otherwise to each himself, we own Infosys and we are not being negatively disturbed by this that the promoters are selling, because they all want to be what we already are, which is fund managers.
But that would be a negative, isn't it? If they did it for philanthropy, it won't be negative. But if they want to be fund managers, then wouldn't be, at least the street take it pretty negatively, that they are thinking of churning out.
No, that's what I'm saying. It is negative for the day because it's done at a discount and it's done without announcement, and some people have inside news on it. Now, whether they reacted onto it, I'm not saying. But what I'm saying is that, because they have sort of given up on the thing and moved on and given it to professional companies, it's like their view versus ours. It's no big deal. And it's not that in the past, when promoters have sold, it has automatically become negative, because they don't. If all the promoters knew exactly what was happening to their market and then the company, then insiders would have always made more money in this kind of thing. Not I'm talking about inside information, but generally buying and selling, or when a company buys back stock. It hasn't held. IBM has been buying back stock for 5 years. Stock hasn't moved. So what I mean is, just because the company does a buyback, or effectively a promoter does a buyback or a sell down, it matters for a few days, but it's not the end of the world.
Okay. Samir, actually in your experience, after a market rises 35%, is it very common for it to be able to put on another, 25% in the subsequent year?
Of course. Every time it happened in 3, 4, 5, 6, 7, it was like that nearly every year. In 98, 99, it was like that. Generally, because there are cycles. So if you look at it, 91 was the peak, then 99, then 07. By that logic, in 2015, whatever, you'll have it. But in general, it's a cycle, and the cycles don't last for 1 year. Also, you have to put it in context that the previous 3, 4 years were pretty bad, at least in dollar-denominated terms. So in a sense, it's a correction from a very deep, overly pessimistic level of the market, because last year, if you note, till September, the negatives that we thought for our market, or the world thought for us, have not turned out to be true. That currency will go to 90, then India will need emergency loan, that they will ask for some excess credit from Japan and things like that. And I myself sold a put at 90 to the rupees to the dollar and earned 2% on it. That means somebody was thinking it'll go to 92 in 1 year. So if those things don't turn out to be true and that gets reversed, you can't call that a rally. It is just a correction from a correction. I think it's at a good level, but it doesn't mean that it is ended, because the actual economic factors, which is lower inflation, bottoming up of the economy and turning up, the orders becoming businesses, all that has to happen now and is happening. Pretty good.
Ramesh, have you seen many years where 35% can be topped up with another 35?
It has. You go back history, whether it's in the Dow or, as Samir correctly pointed out, the various examples in India. The markets don't follow a linear pattern that, they're up only 8% a year. They come in bursts and spurts, and that's precisely the timing. You don't try to time the market, but your time in the market is more important. So, that's fine. I can live with these kind of gains back to back. There's no sense of froth here. What we have to look out when a bull market tops out is a sense of froth. In the public, in the galleries, in the cafe, in the press, the panwala, everyone's talking about stocks and the very poor quality names of the heavily traded companies. So far, there's been minimal dilution of equity also. So I think we're a good wicket. There'll be froth from time to time in individual sectors, individual stocks. They will correct and the market will move on. So I think to try and call the market top at this point, perhaps not the wisest thing, because we have to watch the market to give us a sign that it is topping out, rather than we preempting it because the market has gone up 30% or 35%.
Okay. Actually, Akash Prakash wrote recently, the Amansa Capital fund manager, wrote recently, I think in the Business Standard, saying that the only point of worry is that GEM funds are kind of seriously overweight India, going by their historical and going by their exposure to other countries, emerging market countries. Is that a worry?
I mean, one data point doesn't worry me. I tell you what has always worked, whether it's the 92, 2000, 2008 top, has always been the sense of froth that you see on the type. Public absolutely blind about stocks, very poor quality of stocks leading the advance, absolutely nonsensical headlines in the press, none of which are present today. I mean, mutual funds are just beginning to attract some money. So, I'm sure we'll look at all the data points, but nothing technically suggests to me that we are near a top at this point.
Ramesh, give us a few mid-cap gems for the next few years. You've given us in the past. At You know, as we stand today, which stocks would you recommend?
You know, I love discussing stocks. You can put me up at 2 o'clock at night and I'll be happy to discuss stocks. But as you're aware, there's some new SEBI guidelines out for analysts, which, you know, prevent us actually from discussing stocks unless we're registered with SEBI. So I'm not. But in terms of sectorial things,
you get 6 months to register.
I know, but those
don't do that.
Those deadlines are like throwing the baby out of the bathwater. I mean, you know, I think they chill discussion on stocks. So, but that's for another matter.
Ideas, themes, sectors.
Yeah, you know, one theme that seems to be playing out broadly in India is the e-commerce theme, and it's played out in, say, the logistics sector. It's played out a little bit in the media sector. But I think the convergence theme within that e-commerce, if you just look hard for those kind of plays, you'll come up with some surprising answers. So I think e-commerce as a big theme will resonate through this bull market. I think the market is just getting warmed up to that idea, and you've seen great moves in logistics stocks, some moves in media stocks, some moves in packaging stocks, but there will be other ways to play it, and one other theme to play it is perhaps the convergence theme, digital, data, net, shopping, those kind of themes.
Okay. There are no constraints on technical traders. So, Atul, you can't, you don't have to wriggle out. In any case, two separate questions. One, if the Nifty is at 10,460, where is the mid-cap index? Is it an outperformance, or is it 15,000 plus, depending on which index you look at? And again, leaders.
If you look at the mid-cap, CNX mid-cap index, you find that something very interesting has happened. Whereas the Nifty had broken into lifetime highs at 6,500 plus or thereabouts, which has been many months ago. Yeah. What you've really seen is the CNX mid-cap index has broken out into lifetime highs very recently. Yes. So I feel that there's a very large catch-up. And when I do projections of targets, I think that we could see about a 40% move in the mid-cap space when we see about a 20-22% move in the Nifty per se.
17,000, that is.
Well, whatever, you can get some numbers on it. But more importantly is that you'll see outperformance to the factor of 2 in the mid-cap space. And I think that's very interesting. And that's always been the case. It's nothing new. Yes, over the end you do see froth, you do see excesses, and as Rameshji pointed out, I also love to see what people around me are talking, what is a social mood, what is a thing, and at the moment there is no talk about equity.
No, the very fact that we keep asking you about this wall of worry, is it topped out, is it topped out, I guess is an indication.
Yeah, like even mutual funds, I have friends in mutual funds and they say yes, money is coming, but clients are coming in through SIPs.
Okay.
So that's a very, even they are cautious, even they are expecting corrections, and I think till people are cautious it's fine. The problem is when people used to leverage to get into mutual funds and things like that, you know, when every NFOs are there every day, it's nowhere there, and I think we are very, very far from that.
Okay. Samir, Atul has given us a level of 10,460 on the Nifty in the next 6-7 months. Give us a forecast. You know, where would the Nifty be, say, in the next 12 months?
Well, I am not forecasting the 35% which Lata asked, but for me it doesn't matter. As long as it goes up 15%, I'll be as bullish as I will be if it is 30, because at 15 I will be maximum bullish. So if you said 30, I will have no capacity left to be more in terms of an actual action. 15% dollar terms compounded for a number of years is a dream on which we can raise billions of dollars, which will keep us all very happy. So we are only looking for what is the minimum that we can make or hope to make. It sometimes doesn't even happen like that. Although over times, even if there are dips in between, it ends up being like that over some 7, 8, 10 year period. But there is no need. It should not make anybody more bullish. They should be as bullish if they can see clearly a 15% type of move. Everything above that is good, and we will take it with both hands, but there will be no action that I could take differently if it was 35 instead of 15. The action will be only different if you said it is 0 or minus 15.
Samir, I think you've always, your stocks are out there in the open, so I don't think these disclosure rules should worry you at all. What's your sense about, the stocks that you're holding? Are you seeing, for instance, either in NBFCs or in... yeah, go ahead.
I would just say that these disclosure rules, I don't think anybody ever reads them. They just say that there are disclosure rules, particularly the mutual fund managers who come on your channel. The rule says that tell that this is what you own, and then don't trade against it for 1 month or 2 months or maybe for the rest of your life. But it doesn't say don't talk about a stock. I saw a rhythm this side that they're saying disclosure rules. Their reports are sent out the whole world to all the channels. So why shouldn't they be told to the people who are watching on TV? The only thing which I think SEBI says is that disclose before or after that you own this in your portfolio or personally, and that for at least some X number of days, 20, 30, whatever, you can justify to yourself. Don't go and sell it if you have recommended a buyer, and don't buy it if you recommend a seller, something like that. Yeah. That is all that the disclosure rule says.
I think there is an addition.
For me, it has come out in books that I own HDFC Bank for 20 years, but I don't answer this question. Let me change the question for you. You said that Akash Prakash said that there might be the gems might be overweight and therefore there won't be any, in a sense, more buying that can come from them. Best is to look at specific examples. In HDFC Bank, for 1 year, there has been no excess buying because it has been not open to foreign investors for more than a year, from November last year. Still, the stock is up some 45-50%. So a stock where no foreigner could buy, and in fact, they had to sell. Still, the stock has gone up 45%. So when a market does well, you may a little bit underperform another, like it underperformed the other private sector banks. But this will not stop India. State Bank of India from I think 96 to 2000 something was always at a foreign ownership limit. And although we don't own PSU banks and all that, but actually State Bank of India did quite well. When for nearly some 6-7 years there was no foreign who could buy it. It was at a foreign ownership limit consecutively for some, I forget the period, but it was for more than 5-7 years.
Absolutely.
It still did quite well.
No, to be fair, I also quoted Akash a little selectively. He also said that global funds as yet have not really discovered their India movement, so there's money to come over there. You think so?
Correct. Absolutely. Actually, I've always been saying that the MSCI index is structurally flawed and it underrepresents India's weight in the indices because of the free float factor. But a global fund and all that who are quite happy to pay, say, a 5-7% premium to buy HDFC Bank because for him it's available if you just pay a 5% premium or 7% premium. They will not be bothered so much that it's a foreign ownership limit of not, as long as you can buy it either in ADR or at a 5% premium or whatever. So the interest in India will not be governed by MSCI weight for anybody other than literally following the MSCI, which may be some or 80% of the GEM funds. But the rest of the world, which is coming in opportunistically anyway, for them anyway, India may not be in their index, but they still want to buy it because it has either good companies or is doing well. So all that is still open, and in that context or in that market, India is very, very underrepresented because of not having had visibility from both a top-down and from bottom-up. There have not been many large companies before. But now there are quite a few which even the global guys can buy and forget about maybe 0.5%, 1% of their portfolio, and that will do them good.
Well, Samir, before we let you go, you always give us an idea of where your heart is when you tell us whether you're how net long or how net short you are totally at this point in time?
No, before that, I was thinking when you guys were putting this on my shoulders here, on my nipple here, that another channel had celebrated its 21st anniversary, and they had to call all the 3 Khans from Bombay. And for your anniversary, you have
the 3 Khans of the market.
No, there are not many of them.
So not a bad deal.
Absolutely. Okay, anyway, what stocks would you shout from rooftops at this point in time?
No, actually, as I said, my stocks are not changed for many, many years. We have the same high weightage in private sector banks. Now we have bought a larger stake in ING Kotak as the new, I mean, we owned both of them before, but now we've added to it in this thing. And generally, we feel that ING may, the owners of ING, that is the shareholders of ING, may demand a premium, a higher premium from Kotak. So that also is there, but even if that does not happen because the larger guys have to do it, the Chris Capitals and Fidelity, whoever owns it. But I would think logically that they will not let this deal happen at the current price. But even if it gets done at the current price, it's a good deal. So we are bullish on this merger, and that is one of our, I mean, we owned both of them before, but we have added.
Fair enough. Well, Ramesh
by ING.
Okay. Ramesh has excused himself. Atul, since technical traders don't have the same rules, the mid-cap, what could be the leaders?
I think...
where are the breaking out charts?
Yeah, I mean, we've talked about themes and things like that, but I want to answer. I want to speak about something which is not the question. You know, I feel that this whole global... our markets are definitely driven by FI flows and global liquidity. And there is this lot of concern that happened that, well, when the QE tap was shut, what would happen? And you will see that what happened to Japan. It really picked up the baton. And I think that the next 6 months or 1 year, what's going to happen is going to be in Europe. I have a feeling, or I have a theory
happening there.
Yes, I have a feeling that they are going to pick up the baton from Japan. And what's going to happen is what you are seeing with the DXY, that it just doesn't have any resistance. It's just kind of, spiking up. And the next big thing, just as the yen has depreciated, is what you're going to see in the euro. Okay. And when I look at the charts of European markets, they have been underperforming. But, that explaining to Ramesh earlier, that you look at the charts of Germany, the DAX, about 3 months ago, they were at lifetime highs. It cracked 20-30% to 52-week lows. And in a month, it's again back to lifetime highs. So the kind of strength that you're seeing in the European equity markets, coupled with the weakness that you will see in the euro, I feel that the next 6 months or so, very interesting stuff will happen in Europe. So the baton, or this free flow of money that is happening, I think will not cease. And as FIs have been drivers of our equity markets, it will continue to be so. The source may change, and that's what makes me so bullish, or set out these targets.
A word more on gold and oil, more bearishness?
I think so. In the short term, you may have pullbacks because they are very heavily oversold. But what's important, and for us really, is what's happening with crude. And I think that it's not just going to be a case of crude, which is, it's going to again, it showed us a level and went back. But more importantly is where crude will stay. Because if crude stays at these levels for a longer period of time, that's when I think India's balance sheet will get materially affected. And that's more important. As I said, it's not a level 65 or 60. You may see a one-day blip and be happy. But for India, it's more important that it sustains around these places.
And you see it.
And I see that happening. I think that's going to be the big thing that's happened and will happen.
Actually, Samir started with that, and you're winding up with that theme, which is so positive for India.
Thank you.
Samir, Ramesh, Atul, thank you very much for joining us and being part of this very big day for us, this celebration of our 15th birthday.